Hi, I'm Tom Elliott and welcome to another financial markets update for Hodges Real Estate. Well, over the last month, things have got a whole lot better in the rest of the world and indeed here in Australia. Firstly, let's look at some of the big overseas economies. In the United States, Barack Obama must be very, very glad he has won a second term as president. US unemployment is continuing to fall. It's now down around 7.2%. It was pushing 9.5% during the depths of the global financial crisis. America is undergoing a bit of an industrial revolution at the moment. The discovery of new ways to drill cheap gas and oil supplies, known as shale gas, is really transforming American industry. They don't export the gas in America like we do here in Australia. They're keeping it for their local industry, and it seems the industry is very much getting back on its feet and employing people, as seen by the unemployment figures. The US stock market also has been very, very strong. In fact, the Dow Jones index is now higher than what it was back in 2007 before the global financial crisis. So even though the American economy is not doing as well as, say, Australia's, American investors, American businesses seem to be extraordinarily confident about the future. In Europe, however, things are not so great. Most recently, banks in Cyprus have had a bailout proposed for them. Now, the EU said, well, we'll give you possibly around $10 billion. But for some reason, they said that the Cypriot banking system had to come up with around $5 to $6 billion of money itself. So what did the Cypriot government do? It said, I know, let's just steal the money out of people's bank accounts. An astonishing suggestion. If you had a bank account with more than 100,000 euros, they're going to take, or they were going to take 9.9%, less than 100,000 euros, around about 6.7%. Now, the Cypriot Parliament has now looked at that plan and said, no, we don't like it. But it's cast a bit of a shudder throughout the rest of Europe, because people are saying, well, if the government in Cyprus contemplates just stealing money out of people's bank accounts, who's to say they won't do the same thing in Spain or Italy or France or even Germany one day? So Europe is still very, very much a basket case. The only good thing from market perspectives is that everybody's expected it to be a basket case for quite some time. Longer term, the Europeans still have some massive challenges in terms of their welfare state. They have not made any real attempt to try and restrain welfare spending yet, and I think that's a challenge that lies ahead of them. Here in Australia, well, our economy is slowing. The growth rate a year ago was forecast to be around 3.5%. Right now it's probably looking at around 2.75%, maybe 3% on a good day. The Reserve Bank has of course been cutting interest rates quite dramatically, more on that later. But I will say this, I do think the easing cycle, the cutting cycle for local interest rates is close to the bottom. And as I've maintained a number of times over the past few months, the fixed rates that home buyers can get at the moment over a 2, 3 and in some cases 4-year period look extraordinarily competitive. They're often 50 to 75 basis points below the variable rate. I think that's well worth a look. But the rest of the economy, well, business is doing okay. Here in Victoria, it must be said there is a debate going on as to whether or not the state economy is technically in recession. The new state treasurer, Michael O'Brien, says we are not, as did his predecessor, Kim Wells. But it does seem that state demand, at least within the state of Victoria, has fallen for 2 quarters, although that does not include what we export to the rest of the country. The high Australian dollar, which continues to be very strong, it's currently around 103.7 cents, is extraordinarily damaging to our manufacturing industries, and of course, as we know, many of those industries are located here in Victoria. But for the rest of the country, it's business as usual in the mining states. I guess the biggest problem right now is what's going on in Canberra. As I speak, Simon Crean has decided that there should be a spill against Julia Gillard, the Prime Minister. We'll have to see what happens there, but for those of you who like looking at politics, Australian politics looks a real mess right now, and I guess for businesses, we'd like to see the election come sooner rather than later, get a clean and clear result, and then indeed we can get on with business again. But before that period, there's going to be more and more speculation about what might happen, and as of today, it looks increasingly uncertain. So to the share market now, it has been above 5,000 points for a couple of weeks. Thanks to the Cypriot banking issues I mentioned before, it's dipped back below 5,000 points. But we've got to remember, for the past 18 months to 2 years, our share market has bounced between around 3,900 points and 4,400. So the gap up, the 10 to 15% rise up to over 5,000 has been very welcome. Stocks that pay a good dividend yield have continued to be sought. So Telstra seems very steady around $4.50 a share. The big banks have been very strong indeed. Both Commonwealth and Westpac hit record highs over the past month. Even National Australia Bank, which has gone from the biggest to I think the smallest of the big 4 banks over the past few years, has seen its share price break out of the range of around $22 to $24, up to around $31 a share in recent times. The big mining stocks are unfortunately holding the market back. Goldman Sachs came out just a couple of days ago with a rather pessimistic forecast for iron ore markets, and of course particularly for Rio Tinto, but also for BHP and of course for Fortescue Metals. Iron ore is still a very, very big chunk of their profits, so if the price goes down, that's not good for their profits, not good for their share prices, and potentially not good for the overall market. So Victoria's trundling along. Australian economy is doing okay. I think interest rates have probably bottomed, but I still think they'll stay fairly low for quite some time. What does this mean for property investors? Well, it's interesting. Over the last month or so, the clearance rate has gone up quite dramatically. Last year it was around 55 to 60% for most of the year. Suddenly it's up around 69, 70, and on a good weekend, 72, 73%. Now, prices are yet to really take off, but there is some indication out there that we're getting more competitive bidding at auction. Of course, the papers tend to report those properties which get a very good result. But overall, there's no doubt the clearance rate is up, and my guess is this year we've had two pretty stagnant years of property price growth. That is, house prices in Melbourne really haven't done very much. It's very, very rare for that state of affairs to last for more than a couple of years, particularly when you look at how cheap money is. So I've said it before and I'll say it again, I do think 2013 will be the year to start seeing some growth in house prices again. Nothing dramatic like what we saw in late 2009 and particularly in 2010, but I do think house price increases across the board, depending on what suburb, what region you're in, of between 5 to possibly 10% in certain areas can be expected between now and the end of the year. All right, thanks for listening to me. I'll look forward to your company again in another month for another financial markets update for Hodges Real Estate.